Welcome to another Wall Street Informer production on WSI TV.
It's Monday, and that means it's time for another WSI TV episode. I'm Sean Bauer, Chief Editor of Wall Street Informer here at wallstreetinformer.com. With me is our penny stock king, Jordan Bishop. How's it going, Jordan?
Great, Sean. Thanks for having me.
All right, well, we're going to get into kind of the next subprime crisis. We all remember 2008. We're going to show you how you're going to get your payouts from being part of the really small group who's going to be a part of sounding the alarm bells on this next subprime crisis, and of course, get your paydays for that. But we have a few things to get to right before that, and we are going to start with versus results.
Yeah, definitely. This is a bit of a strange one because I'm taking the win, but I'm also taking a punishment because of my big-headedness fighting against Sean's USO pick. But basically, I had ASG. I made a 2.9% gain on that. Sean was very close with his 2.5% gain on USO. But again, like I said, I bet against USO going up at all. So we're both going to take a punishment, and I believe we can introduce our holy grail of punishments right here to pull from, right?
Right, no wheel of misfortunes today. We're just pulling paper out of a cup. Do you want to do the honors here?
Yeah, let's go. So this is pulling out for your punishment.
Yeah, all right, my punishment.
All right,
then.
so
yeah.
Do you want to shake it up a little bit just in case?
Definitely.
Don't want any...
Don't need any cheating.
Exactly.
All right, here we go.
Let's see what you got, Sean.
Here we go.
All right, we got a hot dog hat for the week.
All right, yeah, so a little twist on our normal hot dog hat punishment you may have seen before, but I guess I just have to wear it all week.
All week, and I'm going to record a few clips each day while he's sitting there working away on his laptop, but he has to wear it all week, and you'll get to see that. So pass it over to you, Sean, if you want to pull out my punishment.
All right, let's do it.
See where it goes.
Yeah, I should have known I was going to lose whenever I was going against a penny stock king, and you picked a penny stock.
Yeah, that's my secret weapon.
We have squirt gun for Jordan. So a brand new punishment. Next week's episode, I'm just going to have a squirt gun on me the whole time. Anytime I feel like it, I'm just going to give Jordan a little pop then.
Yeah, I could use the wash, so.
All right, well, that's all set. We'll get to a new versus round later in the episode.
Right.
But again, we're going to move on to, I think, just some caution that we need to throw your way. A little beware here. Earnings season is coming upon us quickly. It's actually already started, but very, very slowly. And this is where every quarter companies report their earnings. They say, how much they've made, profit per earnings, that sort of thing. It's all based on estimates. So if it's a good report, expect the stock to go up. If it's a bad report, expect the stock to go down.
Right. Our general rule, just as a little housekeeping, you shouldn't stay in a stock if the earnings are coming up, and you shouldn't buy a stock if those earnings are coming closely, because you don't know what's going to happen. We're working on some systems right now that might help us through that. But as for right now, if you're in any stocks that the earnings are coming up closely on, you need to really watch where you're at and maybe take your gains earlier than you want to, but gains nonetheless, And if you want to see what earnings are coming up, you can always search on Google or go on seekingalpha.com or Morningstar earnings. There's plenty of places for you to find out. Easiest way, probably type it in your ticker, type in earnings, and it'll take you to NASDAQ or something like that. So
yeah, really simple to find whenever, any stock you're holding, if those companies are reporting soon, just like Jordan just said. Yeah, and as you alluded to, Jordan, earnings can have a huge impact on a stock price from one day to the next, which is why we have the chart of Nike up right now. Daily chart just very recently, and you can see two different earnings periods here. The first back in March, whenever they had a bad earnings report, it dropped 7.3% in a day, which as we know can wreak havoc on your portfolio. And then later on the right-hand side of the chart there, you can see a good earnings report got it a 10.9% gain.
Obviously, as you saw in the chart for Nike, there was that major gap down, and then it gapped up. So emotions can really play a big part of this. But looking now at Oracle, which we brought up recently, as you can see there, upon those earnings, it jumped 11%. When we traded it using our system, it jumped 226%.
That's right.
Which that system we will be revealing at this year's annual wealth seminar. Keep an eye out for that, because you'll be getting an invitation for sure. You don't want to miss that. But as far as standard trading goes, buying and selling stocks, if you're in a stock, you've made a little bit of a gain and earnings are coming up, we would say probably liquidate those gains and take your profits,
Yeah, I would agree, especially if you're not absolutely certain about any one of your stocks in your portfolio. But again, we've had a few earnings come and go already. This season's really just getting started, like we mentioned, but next week it picks up a little bit. I should say this week it picks up a little bit. next week it starts getting a little nuts with a ton of companies reporting earnings. So just beware of that.
Yeah, definitely. And moving forward, we're going to jump into how you get paid to sound the alarm on the next subprime crisis. We had the housing crisis in 2008. As you all know, that was caused by subprime loans by lenders who were lending money too freely, to whomever they wanted to, without following the proper precautions to screen who they were lending to.
Yeah, Jordan, we actually have subprime auto loans up at the same time that car sales are down, so obviously a pretty bad formula there. And keep in mind that the housing crisis obviously had a major impact on the economy as a whole. The auto loan crisis probably won't have the same sort of impact that far wide, but within the industry itself, it'll probably be just as bad of an impact.
Right, rightly said, Sean. But there is still massive profits to be made here. You are going to get paid for sounding the alarm for this subprime auto loan. It needs to happen. As we found out in the 2008 crisis, there was poisonous loans building up, and there was shady lenders. They were spending the loan money on bonds and all that stuff. So it wasn't a strong foundation for the mortgage market. And now we're seeing that same thing in the auto industry. And these are very early signs that mirror 2008. So maybe we're getting a foot up on what's going to happen in the very near future. But like we said, there's a lot of profits to be made there. And I just want to turn our focus real quick to Santander, because they seem to be the biggest culprit right now. They've only verified 8% of borrowers' incomes. I mean, you're supposed to verify 100%, right. And they're at 8%. They've used that money they've repackaged those into a $1 billion bond. So that could be really poisonous for that industry. Also, 86.2% of their borrowers had FICO scores less than 640, which is considered subprime by definition. And some of those had no credit score at all or no cosigner. So it's just really, they're just really putting in some faulty building blocks into the auto loan industry, and it doesn't look like it's going to turn out too well. But there's many ways that you could profit off this early on.
Yeah, again, go look at the movie Big Short if you haven't seen it already to get kind of an idea of what we're doing here. You can see the similarities, and you can also tell it's kind of a longer game investment strategy here. It's something when you're in early, the profits are going to be massive. And you actually have an ETF for us, Jordan?
Yes, I do. And you would short sell this ETF as that warning signal is finally set.
So buying in reverse, then short selling.
Exactly. So that would be, and it's a bit of a long one, so write this down. It is $DJUSAU. That is the US auto industry ETF that you can trade. And like we said, it's looking like it's quite high above its moving average right now. So another technical sign that maybe it might be starting to falter.
Yeah, sure. And just to reiterate, that's short selling that stock there, that ETF. All right, well, as we get to wrapping up this episode, we have our new versus round. Do you want to lead us off with your next pick?
Yeah, I'm stepping out of the penny stock realm real quick to give Sean a bit of a chance. I'm going to go with Interface Inc. The ticker is TILE, that is Tile. It's sitting around $18.90, so it's looking really nice right now.
Yeah, okay. And just a note before I get to mine, we always use the prices from a few days prior. That's when we select, just so we're not stepping on the toes of anybody in our premium services.
Exactly.
Just a heads up on the prices here. I'm going with GBX, which is Greenbrier. This is a buy trade again for me. It's at $42.45 right now, and I like this one a lot, so I'm definitely going to win guaranteed.
Should be a good competition.
All right, well, we're again getting to those versus punishments next week. Do you have any final notes before we wrap up, Jordan?
Yeah, I just want to mention I'm keeping a close eye on the healthcare sector right now. The ticker is XLV. We could see some very interesting action in that over the coming months. As we all know, the healthcare bill is suffering. It's having a hard time passing through Congress right now. So, should that fail, we might see XLV go down. So I'm just keeping a close eye on it. Yeah,
definitely something on our radar. But Jordan, thanks for being with me today.
Thanks, Sean.
Thank you all for watching, and we'll speak to you next time.
Cheers.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com, where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.